How much should you offer on a house? Should you offer below asking, at asking price? Should you go over asking? And if you are competing against others in the market, how do you make your offer strong without widely overpaying? Because here's the truth. The highest offer doesn't always win. The best offer is the one that gives the seller the most confidence while still protecting you as the buyer. In this video, I'm going to break down exactly how I would think about an offer on a house, how to use comparable sales, days on the market, inspection contingencies, appraisal gap coverage, escalation clauses, and seller-friendly terms. Let's get into it. First, do not start with list price. Before we talk about offering under or over asking, you need to understand one thing. List price is a marketing strategy. It is not automatically market value. A home can be listed low to create a bidding war. Another home can be listed high because the seller is testing the market. And sometimes a property is priced almost exactly where the market supported. So instead of asking what percentage should I offer over list price, ask what is this property actually worth in today's market. Here are the main factors I look at before advising a buyer on an offer. 1. Comparable sales. We start with recent comparable sales. Homes that are truly similar in location, size, condition, lot, layout, school area, view, parking, updates, and overall buyer appeal. An 1,800 square foot home in Redmond is not automatically comparable to another 1,800 square foot home 5 minutes away. One could be on a busy road, one could be fully remodeled, one could have a view, and one could back up to a power lines. The detail matters. 2. Active competitions. Next, I look at the homes that are currently available in the market. If this house is clearly the best option in its price range, it may attract more attention. But if there are 5 similar homes sitting nearby, you may have more leverage. 3. Days on market. Days on market can tell you a lot, but you have to interpret it correctly. A home that has been listed for 2 days may have multiple offers. A home that has been listed for 40 days may be overpriced, may need works, may have a location issue, or it may simply be sitting for the right buyers. The number alone does not tell the whole story. You need to know why it has been sitting. Condition and future cost. You also need to account for the real cost of ownership. Does it need a roof, new windows, sewer work, electrical updates, a new heating system? Does the condo have low reserve? Is there a potential special assessment? An offer is not just the purchase price. It is the price plus the repairs and expenses you will inherit after closing. 5. Seller motivation. Finally, your agent should try to understand the seller situation. Do they need a quick close? Do they need extra time after closing to move out? Have they already purchased another home? Are they relocating? Are they waiting for a very specific number? Sometimes a seller will accept a slightly lower offer if it gives them certainty and confidence. 6. If the house has been sitting. Let's talk about a home that has been on the market for a while. If there are no competing offers and the property has been sitting longer than similar homes, you may have room to negotiate. But don't just throw out a random low number. Your offer should be supported by recent sales, condition, days on the market, and any repair or risk you discover during your due diligence. For example, the home is listed at $850,000. Comparable sales support a value close to $810,000 to $825,000. The home needs a new roof in the near future, and the interior is dated, and it has been active for 35 days. A reasonable strategy might be to offer somewhere that reflects the actual market data and the condition, not simply offer 10% below listing because you saw that strategy online. 7. Offer strategy. Offer strategy equals comps plus condition plus competition plus terms. And in a more buyer-friendly situation, you may be able to negotiate for seller-paid closing costs, a credit toward an interest rate buy-down, a repair credit after inspection, a lower purchase price, a longer inspection period depending on the property, flexible closing, or possession timing. The key is to make an offer that seller can take it seriously, not an offer that feels arbitrary or insulting. What if there are multiple offers? Now, let's talk about what happens when a good home is priced well and multiple buyers want it. This is very common in desired Washington neighborhoods, especially when a home is updated, well located, and priced in a range with strong buyer demand. In that situation, offering just a little overprice without understanding the value can be a mistake. You first need to find out, has the buyer received any offer? Is there any offer review date? Are there any pre-inspections? What are the seller's preferred terms? Is the seller looking for a quick close or a rent back or more time to move? Are other buyers likely waiving or shortening their contingencies? Does the listing agent have concerns about appraisal, financing, or timing? Your agent may not have access to every details, but a strong communication with the listing agent can reveal valuable context and help structure a more competitive offer. From there, decide what the home is truly worth to you, not what strangers online claim it should be worth, and not an amount driven by emotion or fear of losing out. Base your offer on current market data, the home's condition and location, and most importantly, what you can comfortably afford within your financial plan. In many multiple offer situations, an escalation clause can be a useful tool. An escalation clause lets you make an initial offer and automatically increase it by a set amount if a verified competing offer comes in, up to the maximum price you are comfortable paying. For example, a home is listed at $900,000, you offer $900,000, but you agree to beat another qualified offer by $5,000 up to a maximum of $965,000. If another buyer offers $930,000 and qualifies under the terms of the clause, your price could escalate to $935,000. The important part is the cap. Your cap should be the number where you can honestly say, if someone else bid me about that number, I will be disappointed, but I will not regret walking away. Escalation addendum typically identify the starting offer, the escalation amount, the maximum price, and documentation requirements to show that a qualifying competing offer triggered the escalation. Do not set your cap based only on what you think will win. Set it based on your budget, lender guidance, comparable sales, and your comfortable level. Appraisal gap and what buyers need to understand. This is where buyers can get into trouble if they are not careful. Let's say a home is listed at $900,000. Your escalation clause takes you to $960,000, but then the home appraises at $925,000. Your lender based the loan on the appraised value and not automatically on the contract price. So depending on your loan, down payment, and contract terms, you may need to bring additional cash to the closing, renegotiate with the seller, or rely on a financing or appraisal protection provision. In Washington, buyers can use appraisal gap protection provision that specify how much additional cash they are willing and able to contribute if the appraisal comes in low. My general advice is that do not casually waive appraisal protection just because you want to win. Instead, decide on a specific amount you are comfortable covering. For example, I'm willing to cover up to $20,000 if the appraisal is low, but not unlimited. That is far more thoughtful than agreeing to pay whatever it takes after the fact. Inspections. Compete without gambling in a competitive market. Buyers often feel pressure to waive inspections. I want to be very clear. Be extremely careful with that. A house can look beautiful and still have a failing sewer line, aging electrical, hidden drainage issues, mold, roof problems, foundation movements, or unpermitted work. Buyers commonly use the inspection contingency process to inspect, to negotiate, or terminate within the agreed timeline. The Northwest MLS forms also includes options for pre-inspections, septic inspection, well and water system issues, and other property-specific protections. Instead of blindly waiving an inspection, consider strategies such as performing a pre-inspection before submitting your offer, limiting your request to major health, safety, structural, and mechanical or environmental issues, shortening the inspection timeline only if you can realistically complete the work, accepting cosmetic items while still protecting yourself against major defects, requesting a credit rather than asking the seller to coordinate the repairs. You can be competitive without pretending the house has no risk. Terms that can win without raising price. Here is something that many buyers miss. Sometimes the winning offer is not the highest price. It is the easiest offer for the seller to accept. Depending on your situation, you may strengthen your offer by offering a clear financing pre-approval form from a strong local lender, proof of funds for your down payment and appraisal gap coverage, a larger earnest money deposit if appropriate for your situation, a shorter but realistic contingency timeline, a seller rent back or post-closing possession agreement, fewer unnecessary requests, and clear communication and clear paperwork. But be careful, every seller-friendly terms should still be something you understand and can afford. Never agree to a rent back, appraisal gap, shortened timeline, or waiver simply because you think it sounds competitive. The walkaway number. The most important part of making an offer is having a walkaway number. This is the number where you know I would love this house, but I will not damage my financial future to win it, because there will be always another property. Do not let a bidding war convince you to drain your emergency saving, to skip critical due diligence, to take on a payment that makes your house poor, or promise appraisal gap money you don't have, or buy a property you will resent a year after closing. Winning the house is not the goal. Buying the right home at a price and payment you can live with is the goal. If you are planning to buy in Washington State and want helps structuring a smart offer, whether that means negotiating below asking, competing in multiple offer, using an escalation clause, or evaluating appraisal risk, send me a message. Every property, seller, neighborhood, and buyer situation is different. The right offer strategy should be built around the specific home and your actual goal. If this video helps you, make sure you subscribe for more real estate tips, market updates, and buyer strategies. I'll see you in the next video.